Hello and welcome. My name is Ken, and this is June 18th, 2017, brought to you by Conservative ETF Investor. And I am here to go over this week's analysis for the stock market update and what happened during the past week. And we're starting off here on our homepage. Once the video gets loaded, the uploaded video will go right here. And what else? Here's our current recommendations for this week. And let's see. All right, so the main piece of information that you want to know is that on our 7 ETFs that we follow, we are still maintaining a hold posture on all of our positions. And we had some dividends that paid out recently. So here's the ex-dividend date right here. So today is the 18th, so we had some that paid out on June 17th for the S&P 500, QQQ, and we've updated the total of the dividends. That's represented right here, and how much the total dividends has paid out. So you can get to our current recommendations here on the homepage. Plus, if you also click here under current recommendations, you can also get to the same information right here. Under portfolio ideas, you will see our recommended portfolio and our percentage allocations. We diversify over 5 different markets through 7 ETFs, and it's a pretty well diversified portfolio. Okay, so now let's just go back to the home page and let's see how well the portfolio has done. Since our buy recommendations of our ETFs, the portfolio has gained a total of 15.38% up to this week. And for 2017, the portfolio has done 8.17% for the portfolio for calendar year 2017. Not bad for a half a year at all. So now let's jump right into our charts, starting with the S&P 500. We use the weekly the weekly charts. We use stockcharts.com as our service, and what I like to do is I like to use the weekly chart. So each one of these candlesticks represents a 1-week interval. This is going over a time horizon of 5 years. You can see that we've been in trading in an upper trend channel for quite some time, and the S&P 500 is towards the top half of the upper trend line. The S&P 500 gained 0.17% for the week. And then over here is the thumbnail. You can see that over the last week, although we've gained just slightly, it's beginning to show somewhat of a topping pattern there. We'll see if that continues or not. For our momentum indicators, we use the MACD, which is the moving average convergence divergence at default settings. And right now, the MACD is above its signal line, which is a positive thing. Although the thing that is of concern is that we're at a fairly high level here, going past the last 5 years. You can see that when you reach levels this high, they begin to taper down. And when they taper down, usually that involves some type of softening. If I go to the inspect mode here, just to give you an idea, the last time we were here and we came down to this point, the market lost 5%. Over here, when that little correction happened, it was about 4%, somewhere in there. Right now, we're at all-time highs. We really haven't corrected down at all. So I would expect a little bit of a 4% pullback. And if we were to see a 4% pullback, it would take us to the bottom of this range where it's hit here, close to it here, and hit it here. Okay, let me take us off inspect. Let's go over to the QQQ. QQQ symbol is the NASDAQ 100. And again, weekly chart, 5-year time horizon. Now, the NASDAQ 100 has been very, very strong. Now, last week it lost 1.04%. You can see that we were in an trading in an upper trading trend channel. Then it was so strong it broke out above it and has stayed above it and is still above it, which is a very bullish sign, stronger than the S&P 500. Although it has softened up. You can see here in the thumbnail where we topped and have come down for 2 weeks. So we'll see what's going to happen there. Moving down to our momentum indicators, the top one is the MACD, the bottom one is the slow stochastics. The MACD has topped, clearly traveling down and is about to cross below its signal line in a very high overbought range. The slow stochastics is below its signal line, getting ready to penetrate, and it actually technically has already penetrated below 80, which is considered an overbought range, traveling down. The NASDAQ 100 is probably going to break through this upper trend channel and fall in between it. That's going to be my speculative guess. We'll see how it does over the coming weeks, but it appears as if it's going to penetrate below that and then pop back into this range. We are in the summer doldrums right now. I do believe that I forgot to hit the momentum indicator of the slow stochastics on the S&P 500. So you can see on the thumbnail how the slow stochastics came up, came down below its signal line, then crossed above it. So it's kind of going back and forth. The bulls and the bears are having a little bit of a fight here on the slow stochastics. You can also see in the MACD where that flattened out as well. We are in the trend channel. I would not be surprised if it was to soften up and come down into this bottom trend channel during the next month or so. Okay, so that is the S&P 500. We went through the NASDAQ 100. The next chart that we want to look at is the Russell Small Cap 2000. Symbol is IWM. And the small caps have lost 1% over the last week. We're trading in an the ETF is trading in this up trend channel, which is a rising trend channel. It is at the bottom portion of the rising trend channel and it's kind of hugging that along. You can see here in the thumbnail where it's had a lot of turmoil in there and where we lost that 1% over the week. Moving down to our momentum indicators, you can see that the MACD has softened up nicely compared to its high level here, which was way above 4, and it is now at 2.57. So it's at a point where it could go down and up, or it could still continue to come back down. You'll see that we were traveling towards the signal line, but it has since changed direction and is now just traveling flat. We'll see if that can pick up momentum or if it's going to curl back down and go negative below its signal line. It's already trading at the lower edge of the trading channel over here. On the slow stochastics, you can see that it's above its signal line, positive, and getting ready to break out above 80. So from this bottoming point here, that's somewhat bullish, which was somewhere over here. You see we've had 2 bullish weeks, and on this week here was a bearish week of 1%. There's plenty of room for this to go up, and it has support coming in right here. So that fares good for the Russell 2000. Let's move on to the next one, which is VEU. VEU is the Vanguard All World excluding the United States ETF. And this is where your diversification comes into play. The VEU has gained 0.08% for the week, which is pretty much flat. The ETF, if you look at the chart pattern here, we were in a rising wedge formation. We broke up above it and we had a declining tops line, which was a resistance line, broke up above that as well. And it is since trading above it. This is all very bullish action. Here's your thumbnail here. You can see that over the last 3 weeks, or over the last 2 weeks rather, you can see some softening in this ETF. The MACD is over the past 5 years at 1.5, which is at a high level for this ETF. It has topped and is beginning to travel flat. If this ETF begins to come back down towards these support lines, then you can see this MACD will cross below that signal line, but it has not yet, so it's still bullish. The slow stochastics has crossed below its signal line, but it is still above 80, which is still a bullish scenario. That is on VEU. Our next ETF that we look at is Treasuries, which is TLT. This is the 20-year Treasuries, and it's a bond. So this is our bond portfolio. We do prefer you to buy bonds individually rather than a ETF, but for purposes of this portfolio, we track an ETF, not an individual bond. And what have we done? We gained 1.57% for the week. Not a bad week for the bond ETF. The MACD came down here. This is our buy point at this point here when the MACD was very depressed, and also the slow stochastics was below 20 and crossed above its signal line. That was our buy signal on the weekly chart. And since then, we've crossed above this resistance line, and this is the next resistance line, and we're trading in between these two. Slow stochastics, it's above its signal line, and it had topped, but now it's running with a little bit less momentum, but parallel to the signal line, but still positive and still bullish. That is on TLT. Next one is VNQ. VNQ is real estate. So it's a real estate investment trust traded on the New York Stock Exchange, has gained 1.52% for the week, which is not a bad week, but this could potentially be a triple top that we are looking at here. We came up, went down, came up to the same level, went down. Now we have a trend line established. Now you can, let me move over to the thumbnail. You can see a little bit of where it tried to pop up and get up there, and then the bears took control. Didn't bring it down too far, but brought it down off of its highs. That looks like a signal of a topping pattern, and it appears as if that's going to fall over. Let's look at QQQ on VNQ on a daily chart. Now let's move over here. On the daily chart, you can see our triple top pattern right here, and on this chart you can see where it came right up to that trend line and touched it and is rested and closed down below it here for the day. So yeah, I can see a topping pattern happening here. I have 3 candles, not really making any forward movement, and it's softening up. So I can see this coming back down and either coming into this declining tops trend line or coming down into this support line here. Either way, I can see it softening up. If I throw on my indicator, let's get an idea of how much that is. Right now, we're right here. It could soften up as much as 3.85% or as much as 4.75% thereabouts before it bounces, finds support, and continues on to challenge this again. But right now, it appears as if we have a triple top formation and we're going to go down on VNQ. That's on the daily chart. So as a trader, what I would do, all right, let's go back here. As a trader, I would exit out of my position, go to cash, and if I wanted to still hold it, let it get above this before repurchasing it and then closing above it. As an investor, we buy, there's our buy point right here when the MACD and the slow stochastics came down. Our sell point is when we break trend lines. So we would ride this out until it broke below and closed below this trend line as an investor, which is what we are representing here at Conservative ETF Investor. It's going to move on to our next ETF, our last ETF, which is gold. Symbol is GLD. It's the gold spiders. It's traded on the New York Stock Exchange. And how did we do for the week? actually, hold on, I want to change that pattern. That should be a full quote, not a abbreviated quote. Okay, we have gained, we have lost 1% for the week. This is a declining tops trend line that has been in place for a number of years. This particular chart, I'm going back 6 years instead of 5 years. And you can see that this declining tops, I think it goes back even more than that, maybe 7 years. Tell you what, let's just bounce this over to 7. Let's update this chart. And there it is right there. You can see this is the declining tops trend line. And moving over to our thumbnail, you can see that this week we have it's come up to that declining tops trend line and cannot penetrate it, and it is coming down. It appears as if this is going to come back down to this support level over here. From where we stand right now, that is approximately 3.5% from where we are now to see if it's going to hold that support level, which is this one right here. There's another minor support level in here that it could potentially bounce off of, but this is more major support level here. And then ultimately we have this very stronger support level way down here, but that's still another 3% drop or so. On our momentum indicators, we have the MACD topped and is now traveling south towards its signal line, but has not crossed it yet. Slow stochastics has technically crossed below its signal line, is below 80 and going to travel down. So it looks as if gold has lost its momentum and it's going to come down into support. Now that is it for our ETFs. Our next thing that we want to look at is our VIX. The VIX is the volatility indicator for the S&P 500. We look at this on a daily chart going over a time horizon of 1 year. It's an inverse chart, meaning that as the number is down, the stock market goes up. The VIX has lost 4.77% over its last trading day, because this is a daily chart. And you can see that the 50-day moving average, we have two moving averages here. The 50 is blue, exponential moving average, and the red is the 200 EMA. And the 50 is below the 200, and the index is below even the faster moving average. This is all very bullish for the S&P 500. So the only thing that we have that's of concern is the depressed levels that we're at. We're at really low levels for the VIX, and when you have really low levels, they bounce, come up, and when that happens, here's the S&P 500 down at the bottom. We come down in the S&P 500. But right now, it's still bullish. The next indicator that we want to look at is the VXN. The VXN indicator is the volatility indicator for the NASDAQ 100. This one over its last trading session has gone up 0.62%. Again, it's an inverse reading on the index. This is a daily chart over a 1-year time horizon. You can see that the faster moving average, the 50, is crawling up, getting ready to test and possibly go above its 200. If the index stays above these readings, the 50 and the 200, this 50 will cross above it, which is a bearish sign for stocks. You can see that down here we have QQQ chart, and you can see as the VXN began to crawl up, the QQQ ETF began to go down. So again, it's an inverse relationship. So that's it. Again, going back to our website and looking at our current recommendations, you can see that we are still on hold posture for all of our positions. So stay tuned. Please subscribe to the channel and keep us updated and going with us. This is Ken. Thank you. Signing off.